Welcome to my channel. In the previous classes we were discussing about the treatment of goodwill in the case of admission of a partner. In today's class we are going to discuss about hidden goodwill, how to treat hidden goodwill, goodwill raised at its full value and then written off, and the revaluation account. First of all, we will discuss about hidden goodwill. If the value of the goodwill of the firm is not specifically given the question, then it is to be inferred. We have to understand from the arrangement of the capital or net worth and profit sharing ratio. Here is one question relating to this. Here, Hari and Naveen were partners in a firm sharing profits in the ratio 5:3. Their capitals were 70,000 and 50,000 respectively. They admitted Santosh on 1st April 2011 as the new partner for 1/5 share in the future profit. Santosh brought in 50,000 as his capital. Calculate the value of goodwill of the firm and record the same. Record means we have to pass the journal entry for the same. So first of all, we have to make a working note. We have to calculate the value of the goodwill. For this, first of all, we have to write about the Santosh's capital. That is given the question, that is 50,000. Then Santosh's share of profits also given the question 1/5. Then total capital of the new firm we have to calculate. The total capital into 1/5 is 50,000. Hence, from this, the total capital will be 50,000 into 5/1. That is, this 5 is going to the numerator side. If it is when we are cross multiplying, this 5 will goes into the numerator side. So, the total capital of the firm will be 50,000 into 5, that is 2,50,000. Then we have to add the total capital of Hari, Naveen and Santosh. That all capital is given the question, that is 70,000, 50,000 and 50,000 respectively. So by adding this one, we will get the amount 1,70,000. Then goodwill of the firm will be, the new capital is 2,50,000 and the calculated capital is 1,70,000. So there will be a hidden goodwill that will be calculated by subtracting the total capital of the new firm minus the capital of Hari, Naveen and Santosh. So that will be 80,000. Then we have to calculate the Santosh's share. That will be 80,000 into his share is 1/5. So 1/5. That will be 16,000. Then we have to pass on the journal entry. We have to write the heading journal. Then the format, date, particulars. Here it is not written in the format. We have to write the date, particulars, ledger folio, debit and credit. Here the date is given the question, that is 2011 April 1. That we have to write in the date column. Then for the goodwill for transfer in the new goodwill brought in by the partner should be transferred to the old partners in the sacrificing ratio, that is 5:3. So the journal entry will be Santosh's capital account debited to Hari's capital to Naveen's capital. Then 16,000 is the total capital brought by Santosh. So 16,000 into 5/8. 8 means 5 plus 3. That is 10,000, and 16,000 into 3/8 will be 6,000. Narration is, for credit given to Hari and Naveen on Santosh's admission in the sacrificing ratio 5:3. Then another treatment is regarding the goodwill raised at its full value and then written off. Then the journal entry for raising the goodwill is goodwill raised in the books is goodwill account debited to old partners capital account. Then for writing off all partners capital account debited to goodwill account. Then the revaluation of assets and liabilities. On admission of a new partner, it is always desirable to have the assets and liabilities shown at their true values. If these are overstated or understated, they should be revalued and the resultant profit or loss should be transferred to the old partners in the profit sharing ratio. So, to make sure that the new partner should not take any benefit or suffer any loss on account of the difference in the value of this is to make sure that the new partner should not take any benefits or suffer any losses on account of the difference in the value of assets and liabilities. Then the revaluation account. This revaluation is calculated in a account known as the revaluation account. To ascertain the profit or loss on revaluing the assets and liabilities, a revaluation account or profit and loss adjustment account is prepared. The revaluation account is a nominal account. Nominal account means there are three types of accounts. That is nominal account, real account and personal account. Nominal account, the particularity or the main thing about the nominal account is that on the debit side there will be expenses and losses, and credit side there will be income and gain. And the treatment is debit all expenses and losses and credit all incomes and gains. That type of account is the nominal account. That is, it's to be prepared to bring the assets and liabilities to their current values and to ascertain the resultant profit or loss. Then, why we prepare the revaluation account? The first thing is to bring the assets and liabilities of the firm to the true values and to find the profit or loss arising out of revaluation. So there are certain journal entries relating to this. For the increase in the value of asset, if the asset is increased, the value of the asset is increased, the journal entry will be asset account debited to profit and loss adjustment account. Profit and loss adjustment account or revaluation account. For decrease on the value of asset, profit and loss adjustment account debited to asset account. For decrease on the amount of liability, liability account debited to profit and loss adjustment account. For increase in the amount of liability, profit and loss adjustment account debited to liability account. For an unrecorded asset, asset account debited to profit and loss adjustment account. For an unrecorded liability, profit and loss adjustment account debited to liability. For the transfer of profit and loss adjustment account balance, if it is credit or profit and loss adjustment account debited to all partners capital account. If debit balance, that is loss, all the partners capital account debited to profit and loss adjustment account. Here is the format of the revaluation account. The entries, the debit entries, as it is revaluation account is an account, the debit entries made in the journal will be transferred to the credit side and the credit entries to be transferred to the debit side. So this account will be in this form. We'll discuss the problems in the next class. Okay, thank you.